Hi guys, this one's going to cover basically more or less questions that I've had over the last couple of days. Now, I've actually posted recently a couple of bigger streams, especially for our subscribers. This one was a long one for me. This was 47 minutes. This goes into a lot of detail as to why and where we are. I've given some of that detail, but in a kind of a softened version, mainly due to the level of experience and understanding, and that's really part of what we try to be careful with in terms of what we're showing within the Discord and obviously within TradingView, because it kind of just leads to more questions. So the main part of it for us is understanding how the Wyckoff and the Elliott and the other bits and pieces all fit together. That's actually what we do teach. So it's very difficult when we put something out for free and people are asking, I suppose, basic questions. And that's really due to the lack of understanding as to what we're actually trying to show more for the subscribers. So in essence, one of the main things I've had is, could this be the five, right? From the move up one, two, three, four, and five. And the answer is yes, right? There's no, there's no real kind of wrong or right with this. Now, personally, I'm less of a fan. Can it be? Of course it can. Okay. So if we look at the moves either which way, we'd have to assume that this was the weekly four and we'd be coming up for a weekly five. And I'm going to draw that in the middle because it could be this and it could be this. Okay. So first things first, I personally didn't like this move. I didn't like this. And obviously we started to get this move up. Now in August, I've covered this and why we would actually pull back to preload to go again. And in September, I was covering why we would only actually be seeing just over 65k as an extension level. Now, you'll see that in a couple of the posts. You'll see that in a lot of the streams that I've done recently. I've covered these levels and I've covered these angles kind of more and more and more again, okay? So you'll see from March why we were going to do what we were doing, where we were in August to move down to go back up. If you zoom in on there, you'll see why I was expecting just over 65, and then the buyers would likely see 40k again very quick. Those extension levels were already pre-mapped out. This was going back September the 30th. Why this level was key. Again, something that we've shown within the Discord channel, where we actually pinged to the level into newfound territory, and then ultimately what's happening from there. Okay, so there's nothing really been more of a shock at the moment in terms of where we are. Everything is going as you'd expect it to go. It just means now, if we go back to the last swing, can we identify where we are within this current swing? Now, personally, the problem I have for a lot of retail traders right now, you see Twitter, you see the chat channel. The problem is people are assuming that this is going to be a V-shaped recovery and we're just going to go to 250k. Now, I've shared this video, this with the calls, as insane as unicorns or as real as unicorns. If you watch this video, you'll kind of see this guy's in there calling 300k. I mean, plan B 135k for December. We're more than 90k out, guys. I don't even know what to say to that anymore. If somebody told me I was 90k off a call, I'd probably finish trading. I think overall, what you have to understand is the market cycles, the overall position that we're in, and appreciate maybe the time factors involved in some of this. Okay, so if you look at the time factor from the weekly move, now we could call the weekly 3 and a 4. Now, obviously, I'd had the Wyckoff structure starting over here, then obviously the distribution. So for me, the telltale signs were already written in as early as February that we were getting there. The calls that I was making in January were just showing the Elliott extensions coming into a Wyckoff distribution pattern for us to then drop. We've done that. We've now gone from 4 to 5 on a weekly, and clearly with a lack of volume, we were actually going to get this level again that we'd already showed why, the logic behind why we were going to get that level. Okay. Now, when you look back at this, another question that I had quite a lot was the volume, right? And people would say to me when we're at this kind of level, it was, well, the volume's going to be smaller because the price is greater. And you think, well, hang on, the price is greater over here than it was there. Okay. And it's clearly simple to see. Yes, you've got some decent spike volumes, a decent spike volume, decent spike volume. You've got, again, decent spike volume. But you can see that there was nothing really there all the way through. You had some down volume, which was half decent, but there was nothing really, a little bit of a build there. There was nothing really in the favor in the bullish calls. Okay, now that's quite a big telltale sign in itself. And again, there's lots of other ways to determine that and to work that out and to understand how to read that as a whole. But volume for me was just low, right? That was something that I expected to see a new all-time high. You'd actually like to see the move do something like this: a decent one, a pullback two to retest into this level, then a very explosive three, a four, and a five taking way beyond the highs, right? That would have been the ideal scenario. We didn't get it, right? So in essence, all we've done is we've truncated up to the top of the five. And again, something that we've shown is something that we talk about within the group. We're talking about how these extension levels play themselves out, okay? Now, the general idea is that regardless of, going back to this, regardless of where we are at the five down, one thing is for sure is that this was the five, right? There's no questioning that now in terms of what it is. Now, whether it's this or this, kind of irrelevant. And this is, again, part of the major problem I have with a lot of people who study purely Elliott, is that Elliott can kind of be confusing in its own right. There's a lot of things that you can interpret one way or the other, and you can always get it wrong, right? So regardless of how long you've done this, whether you've done this year or whether you've been doing this for 20 years like myself, there's always going to be room for mistakes. There's always going to be room for doubt, right? And ultimately, all you got to look at is understanding where we are as an overall bias. There are far more accurate techniques than Elliott to pick the levels when you enter or near the regions of the extensions that we're actually looking for. So if we assume, first of all, this being the five, yes, we could have a 1, 2, 3, we could have a 1, 2, 3, and therefore this would be regarded as an expanded flat. The expanded flat then would give us a 5-wave move down, right? And we could argue that this is this, right? Now, we could also say an A, B, C, we've probably got some kind of fib extension level there. So for a lot of people, it's just a tick in a box. A is already in, right? Now, I'm not arguing with that because that could be the case, right? What you have to look at is when you work in Elliott wave, you really want to understand the probabilities, right? More than the possibilities, okay? Because the possibilities can change and vary depending on the next move, whereas the probability is going to give you a better appreciation of where in that roadmap we are, okay? So right now we've got potentially a 5 and an A, B, C, right? That's option 1. We've also got another option where we're likely to see a 1, a 2, potentially a 3, a 4, and I'd say a 5, right? Which would give us basically the same outcome, or more or less. We might go a little bit deeper to confuse people. What you really have to understand is what composite man is likely to do in these kinds of scenarios, right? You have to look at what the retail sentiment is. And the retail sentiment is pretty easy to get a handle on. All you have to do is log into Twitter and you'll get a good feel for buy the dip, this is going to the moon, etc., etc., etc. And therefore, the more sentiment we have to the upside, the easier it is to see where these pullbacks are likely to come. Okay. So for me, we've got two scenarios which are both high in terms of the probability factors right now. We've actually got this being the A, or we've got the A still being formed. Okay, now again, a misconception for many people is that if the A is still being formed, are we going to have to go deep? No, we don't, right? We could create a double bottom and go from there, right? Which would then give us the B move. Okay, so that's the second option. Personally, that's my preferred option as we stand, right? There's a few reasons that I don't really like the A being in where we are already. I'm not going to rule it out, but I'm just not a fan compared to the second option of the 5 down. and then we're going to see some kind of zigzag. And like I said, it doesn't have to be deep. We could pull back 38% and we could actually go down again only 618, which would actually create a massive accumulation range. And you would expect to see a late stage spring at this particular point. Okay, so I'm not saying obviously from the date and the time, ignore that. This is just hypothetical, but I wouldn't be at all surprised to see that as a kind of level, as something that we could potentially see. Okay, so let me get rid of some of these again. So one way or the other, right, whether it's the first high or the 69 being the high, it doesn't really matter. We've come down to what I would regard as an A extension, kind of anyway. The next question is going to be is, are we likely to see a 3 move something like this in here, then potentially another 3 sit in? You can't even call that a 3 if I'm honest. So first things first is this the B? We've got a stochastic that's currently overbought, but could easily fall into the false bar. And I think the weekly stochastic is actually just below the center at the moment. So we've got a little bit of room that we can still drift on up. So a couple of questions for me and a couple of, I guess, personal questions rather than questions from other people is that if I'm looking at this chart and analyzing the chart, I'm going to be thinking to myself, what am I seeing? What am I likely to see right now? And what is giving me confidence that the A is in and we're off the B? What's giving me doubt that the A is not quite finished yet? And I think that's the bit for me that I'm still looking at and kind of digesting in terms of where we are and why we can go kind of deeper. So again, if we come back into what I've shown in this morning, there's a lot of logic as to why the price can actually come back down to the previous levels, right? Which would ultimately be somewhere in this range, which, we could argue we've already been there. The problem is when you look at the COT data, there's still a lot of shorts kind of mapped out there on that chart, which would suggest that we're still likely to come in and feed on the liquidity there before ultimately going up, right? So for me, first things first, we've got the variation of the time, right? Now you'd be thinking to yourself, how long did it take from the weekly 3 to the weekly 4? How long has it taken from the monthly 3 to the monthly 4, right? So there's the first thing that I don't like. The second thing is on this low volume move, the 1, 2, the 3, the 4, and the 5 on the assumption that the 5, we actually missed a fib extension there, only by a little bit, but this one touches it practically to the pip, right? So for me, probably more the tick in the box. When I zoom inside this level and I go down from this level, I'd be likely to see the 1, the 2, and then we're going to have a very explosive 3, which is really what you want to see when you're getting the 3. And then you're looking for the 4 and the 5, right? So again, this doesn't have to be the way. It's just the way that I'm reading this right now. So personally, I prefer this one being the 5, and we're currently in a 5-wave move down, with this being the 1, the 2, the 3, the 4, and the 5. Okay, there's nothing yet that will tell me that this is already turning bullish. There's nothing to say that we're out of the bearish trend right now. If we look at the major levels, we have to draw a consolidation cluster sitting in and around this, which means until we get above 48, realistically, I'm not interested in that long in terms of no confirmation of the long yet. Now, if we come back to what I've just said about the Wyckoff schematic, we can actually see the first move, potentially the rally away from this move, which means we're likely to come on back down, go back up, come on back down. And this could easily drag out most of the year, if I'm honest. If you look at what Composite Man will be looking to do, he's currently offloading the positions that he's currently holding. Okay, now this one, again, I've covered this in a couple of streams. I've covered this on various posts. You can actually see the blue is the short positions, right, of the institutional buyers, traders, whatever you want to call them. Okay, so right now these guys are selling into the retail sentiment that are all buying. And that's the reason that I feel this is going to be a drawn out process, because there's such a divergence in the buys and sells for the leverage funds that I feel that they're going to have to unload and reload. They'll be then unloading and reloading. We probably get a spring kind of freakout, and then we'll start getting that more explosive movement up to the monthly 5. So that's where I think we are at the moment. That's what I'm feeling, across the board, right? So regardless of this being A in or A is not quite in yet, it could easily be the double bottom. I'd regard the monthly 3 and the weekly 3 almost as a double top. And although there's only 4 or 5K in it, in Bitcoin terms, that's not a lot on a monthly scale. So if we come down to 28K around this level, that could easily still be the A. I'm not going to rule that out as we are right now. I think it's the hope, the desire of the retail wanting this to be the end, and now we're off to 100K. I just don't get that feeling as we are right now. I'm not saying it's not going to happen. I'm saying I don't feel that in the current situation, where the current price action is, given the current volume, given the profile, given the situation. And I feel, given we've got COT data massively to the downside, I think there's still a little bit more pain to endure before we actually take this anywhere beyond the previous all-time high. Okay. Now, something else I get quite a lot is the argument kind of to and for stochastic RSI, right? Now, if you understand how to use these, stochastics are definitely better for range bound markets, okay? And then you've got RSI, which is better for trending markets. So again, problem for me is when people tell me to go and look at this guy's analysis, or go and look at this, go and look at that. If they've got an RSI on their chart and we're actually in a corrective market, it doesn't fill me with confidence that these guys understand the tools that they're using, right? Now, not only that, these indicators are lagging, right? So yes, I still use an RSI. Yes, I still use stochastic, but ultimately it's using them for understanding where the markets are most likely going to continue on to, rather than as trend reversal tools. Okay, so you'll see in our stochastic, we've got what we call a false bar stochastic. And this basically means that the trend is likely to continue as ultimately the price carries on down. Okay, so when you look at an RSI indicator on your chart, if we're trending, I got no problem with that, because you can use it pretty much the same as a stochastic. And you can actually use that then to understand when the trend is likely to end. But it's not as simple as many of you will think, of the price comes out of the region, the overbought or the oversold, and now you can sell it or buy it. There's a little bit more to that in terms of how you utilize it. And therefore, I'm not really going to comment on other analysts on what they are talking about within their RSI situation. Okay. Now, the last one, and it's more of a gripe again, is ultimately the moving averages, right? Guys have been doing this for 20 odd years. Moving averages are not all that great, in terms of what they are. You've got so many different styles, you've got so many different time periods, and everybody seems to think that there's a magic time. There's an 8, there's a 20, there's a 20 week, there's a 200 day. The reality is, guys, everybody's got a slightly different opinion, right? Everybody uses them in a slightly different way. Most retail traders are taught to use moving averages to get a feeling of whether the price is in an uptrend or a downtrend, right? And that's really all it is. If I look back at the last, from what, November the 11th, and I say to myself, are we under the 200-day? Of course we are. If we look at what we're looking at right now, we look at the last 50 days, 60 days. 60 days is 2 months. We look at what we've done in the last 2 months, well, we've gone down. I don't need a moving average to tell me that. So, when people talk about moving averages, oh, it's touched this, it's touched that, it's crossing that, it really doesn't mean anything when you know what you're looking for on the charts. It's a tool designed to ultimately help retail traders, newbie traders, understand where we are in relation to the previous set amount of time that they've decided to utilize. Right. So, point being, I don't care what other analyst is using a 200, a 50, a 20, whether it's a daily or a weekly. I don't care. Right. What I'm looking at is the forecasted projection levels around areas of liquidity. Then we'll leverage things like the master pattern, which is the dumbed down version of Wyckoff, to ultimately give us the entry signals to what we are actually trading. Right. So other than that, I'm trying to keep the charts clean. I'm trying to give you the education kind of in and around this. And ultimately understanding where we are in terms of Elliott is only given a bias in the big picture as to then how you can pick your entries on the smaller time frames. Okay, so I know this video is a little bit longer winded again, but ultimately, I've got to answer some of these questions as to where we are right now. Do I think we are ready to go to 100K? No. Do I think we will go to 100? Well, definitely, but I don't think it's yet. Okay, so that's where we are. That's my opinion. I could be wrong on this. I feel that A is not quite complete yet. We could be having another bout down. If we go to 48, I'd probably say that that would mean that this was the A. B is coming in, and we might then have a very sharp, aggressive C, which will allow us then to move quite fast from there. But I think at the moment, the way that the price is lingering, I don't feel that this is actually ready yet. And therefore, I think A is not quite complete. And that's just my opinion. So, anyway, I hope you enjoyed it. Sorry it's longer winded, and I'll see you in the next stream. Thanks for watching all.